Hi, welcome to today's trade. Um, we're doing a breaker. I already entered long here. Just took a while for the recording. You can see for the recording program to start up. Um, but yeah, so the idea is we're buying this breaker, and the market is coming out of an expansion move over here. So here are sellers with their buy stops above. And that's why we're targeting this high. So I entered long as this candle opened, as we traded into this area, expecting it to trade through it. And then we leave our stop over here because we have an order block. We also have an inversion fair value gap over here. So it doesn't have to, but as we're trading through this breaker higher, we can trade to this area over here and then um, see like a consolidation and a retracement back down to the breaker. But um, yeah, we really we don't have to see that. That's why we enter long as we trade through the breaker. So if we get a retracement back down, we expect that. We don't close the trade or um, rush our stops. And this trade is like pre-market open. Where's 7 o'clock? So here the market opened. Now I am running the risk of this being a stop run and reversing over here. And then we will obviously take the loss. Um, but I'm expecting this breaker to hold. If you include the entire range of the breaker, we can trade back down to this low over here. So technically, my stop should be here. That also gives the trade it gives price the ability, if it wants to trade back down, into a discount. We have a discount price over here, 62. So we have more factors and this order block um, that would prevent us from getting stopped out. But for now, I'm trusting that the breaker, the, um, the high of this breaker, would support price. So let's see if we get a tiny consolidation over here. And then we just want to see price trade back down. and continue. Like I said, it doesn't have to. That's why we're already in the trade. But it would be nice, and we can get another. I know there's a fair value gap over here um, for me to also enter on, but I'll enter once we get. If we get back to the breaker, I'll go long again. So basically on a 5 minute, the chart looks like this. Let me just take this away. Where we opened. There we go. I marked out this potential breaker over here, but we never traded back to it here at the bottom. So as we left it and we saw this displacement higher, we used this breaker. We can also on a larger time frame, larger scale, there's this breaker. I want to see how the market reacts at this one standard deviation. It would be ideal for it to trade down below this internal low over here. And we have an internal low over here as well. Trade down, take that, we buy that, and then we run it back up. So we can leave a buy limit over there. Leave another buy limit over here. Expect that it will trade to this level. and because the spread is 1.8, you will see that the market needs to trade through it quite a bit before it will trigger it. If this was a futures market, we would have been triggered already. You can see the buy limit is still there. It gets triggered. As soon as we touch that, I'm going to buy again. There, it touched it. Now let's see if the last buy limit will also get triggered. It traded through the price, but it didn't trigger it. But we did go long as it touched over there. I'm going to go long again. Okay, so that is triggered. We have 2% risk on this trade. I'm going to move it below 50% of this area. So we have 2,500 risk. And the reason I'm moving it lower is because we can get a mohawk below this breaker. And if we get a mohawk, I'm going to get tapped out. I'm going to get stopped out. And then we have to re-enter again. But I'd rather just move it down. I'm not moving it away because I don't know where it's going to turn. Like I said, we can get a mohawk, just a spike through this low. You see where the body's closed. The body closes up here, but this wick is doing the damage. And it is Monday and pre-market, but this tiny setup. Let's make this a short scalp. Back to the eye. I think that we will trade back to this level and then run up. So I have to keep my stop below this fair value gap. And what I can do now is I can focus on more entries. So if I think that this is the low, I can quickly measure it. Let's see. So 1,500 is currently where I will be stopped at. But I'm leaving my stop out of the way. So I'm basically working with 1,500. If we push down, that's about it. If I enter another long, it would kind of be 2,000 that I'm risking. So I want to see if I can enter another long over here. And then as soon as the market structure is in, and I can see that this low is in place, or maybe another low down here, then I can move the stop higher. I'm just keeping it out of the way of the wicks. And like I said, we are working with a inverted fair value gap. We'll make this orange. Let's make it yellow. So it can trade all the way back down here. It's perfectly fine. And we can trade through the inversion a little bit to take out this low. So once again, we are in the inverted fair value gap. Now we want to see, does it support price and push it back up? So the inverted gap are these two yellow lines. Now, I also want you to think, if you look at price like this, how many PD arrays do we have currently supporting our buy? We've got one, the breaker. We've got an inverted fair value gap. We've got another order block with a fair value gap. We have the market in discount below 50%. So we have 1, 2, 3, 4, discount 5. So currently we have 5 PD arrays. This high will be taken out. So as the market's coming down, I want to keep buying, keep buying, keep buying. If we get a mohawk through the low of the inverted fair value gap, this will trigger us in with another buy position. So at the moment we're waiting for, that's the one buy limit I'm leaving there. And the logic is, if it makes a mohawk and takes out this low into this fair value gap, which is a fair value gap below a low, which is a unicorn. That's the one area we want to buy again at. The second area we want to buy at is this order block. So what validates this order block, and what am I looking at the moment? I'm seeing that price is respecting this order block over here. We also have the fair value gap. We have taken internal sell side. We have traded above this order block, which makes it valid. It doesn't mean that the price cannot trade down through it, then it's a losing trade. It just means now it's valid. We already have an up close candle, which would fool the early buyers that would go in on this up close candle and put their stop below this low. They've been taken out as well. So the market can push up higher now. And that's what we want to see. Also, the same with this order block. What do we have after it? The gap. What do we have now after this order block? Another gap. So this can either act as a breakaway gap to run for this liquidity. Why? Because we had a breaker. Remember the context. We had a breaker. We said initially the market can trade down. If it trades down again, what are we going to do? We're going to buy. That's what we did. Now we want to see the market reverse. Yes, it's reversing with an order block, with a fair value gap at the breaker, with 5 PD arrays. Now we have 6 PD arrays, 7 PD arrays converging at the same level. So now we can move this buy limit higher if it wants to trigger it. I think we might do a push up. It depends what it wants to do here. This is a nice clean run, so we might just do a straight run through it. But if we run to this high, stop, maybe make 1 or 2 down close candles, I'll buy that again. But I would like to see this high. If I look at the price action lower, the price action at the moment is nice and fast. You see, we run up. We never got a consolidation here that I mentioned is a possibility. We just ran up, came back down, run back up. So the market is nice and smooth. So we can expect maybe a run straight through it, or we could just stop at this high, fall back down a little bit with 1 or 2 down close candles, and then push it higher, and then do the run through. So I'm going to get rid of this buy limit. I'm going to move my stop below 50% over here, and then as soon as we take profit, we are basically at it. So I'm going to move my stop into profit. So we said if we get a down close candle over here, I want to buy that as well. Keeping in mind as it ran up, it can really be smooth and run down as well. So if I want to keep my stop, if I want to move my stop back down, I can't do that because we still have this. Remember, I said I want to reaccumulate. I want to do more longs if we get down close candles. So there, but you see with the spread being so bad, my entry point was over there. That's terrible. But the idea is, let's move it up a bit. So what we want to see now is the market just run through. We can do another low, but okay, then we go long again. We can trade all the way back down. So my next buy entry will be here. We have these two for a continuation now. If this remains as a breakaway gap, we can trade into this gap, fill that, reverse. We can reverse right now, or if we trade lower, I'll enter long again over here. But like I said, before it happened, we can run up before we break this high, stop, make one or two down close candles, listen to the video, and then run through it. It's exactly what I said. And if we make down close candles, I will buy that. And that's what I did. And then after that, we can get the run through. Because what's happening now is we are engineering new liquidity. So a lot of guys, a lot of traders would be selling this at the moment because you've got resistance over there, new resistance, this double top supporting it. What I also have to keep in mind is because we are pre-market, we can print these double tops and maybe even leave them there for market open. So that's why you don't always want to trade pre-market. We can leave these equal highs there, and then I can take a loss, and they will only be traded after market open or 8:30. But let's leave the trade like this and see. So if this stays in as a double top, like I said, this is engineering liquidity for later. We are still too early. Then I will come back at 8:30 and target this high again and do another video and show you how I'm going to target this high and um, do another trade, because then we are leaving these highs for a later time for 8:30. I will do another buy down here. If we trade below this low, again, within this candle, like right there, I'll go long. So what you can do in this situation is you can do a OTE entry as well. So 62, if we hit that, we can go long. We are in a discount, that's perfectly fine. So we can trade lower, and look how this fair value gap lines up with the order block, everything at a nice deep discount. So we can see how the market respected this inverted fair value gap in confluence with everything else. But the main idea of this run higher is from the order block and this inverted fair value gap that we used to do the run up. So if this trade is a loss, what is happening with these highs is the market will, if they stay intact, we will do another run below this low, and then for 830 reverse, maybe a bit lower, trade around here, spend some time, and then from there we can do a run higher. Here we have another entry at OTE. I'm expecting this this low to hold, to be in place. I think we're gonna run it in the new in the next macro. So the next macro is over here. We're 1 minute away from our macro. And what will happen then? That's where um, the price engine that delivers price, it has this window of opportunity to run for these highs. So this is just time distortion and trading back to a discount, giving us another entry. And now the time is right for the algo to run price through this high. We also traded back to the breaker. So how many PD arrays do we have with this trade lower? We've got a nice OTE. Let me just draw this OTE out. And I mentioned this as a nice OTE setup as the market was trading down. Perfect. And you can see the two buy entries over here. So we've got discount price below 15. We have an OTE set up. We have the breaker. We have a fair value gap. We have an order block. We rejected the inverted fair value gap, which shows us, remember when we were down here, we want to see these two yellow lines support price. It did. Came back down, discount, run up. We are in the macro. So basically what happened over here, this high running up there, it was basically not allowed to run above this high, the regional high to the left, because of time. And after that, with this trade lower, traders think that this is a double top. They are selling this, they are shorting with their stops above, and we are buying this, and we are going to run up within this two lines. The market will trade through this level. Look at the gap up. It is in a hurry to get to this level. The price can now spool. It starts spinning, starts revving up. It starts, it's like revving up your engine. It starts moving. It has an objective to fulfill. Nothing in here is any bearish PD arrays that we want to look at, like a bearish order block or nothing. This is not a market structure shift. This is not a bearish fair value gap. Well, it is, but we will use it to go long. And because we're in it over here, I'll go long again just to show you. Now, I also want you to notice all of my buy trades except for this one and this one, which is the low, and this one, which is the low. I bought it when it was here. And except for this one, all of them are down close candles that we buy. Buy down close candle, buy the down close candle, buy the down close candle. This one I buy because it is an inversion, same as this level over here. But we do not have to trade back down to it. We actually traded through it over here to the highs, and then we came back down in one candle. So we already traded through it and we came back down. So I bought that one on the expansion up. We don't have to trade back down to this level to go higher. So that's why I buy this, and to show you that this is going to be support. Nice down close candle. We might get another one. and then run through, or we're going to run through it now. Another down plus candle we can buy. If we get a touch over here, we'll buy that again. And this black line over here is a previous high. So we've got a lot of liquidity above this level. So the market will trade through, maybe give us a nice fast run through this level. But for now, it doesn't matter how far it's going. This video was just about trading the breaker, how price forms at the breaker, what you can use, what do you look at. And remember, this is pre-market. So obviously the first level we're looking for is this high over here. The dashed line within this time window. So let's see if we get it. So I told you when we are down here, we will try this high, these highs. We will try this level within this time. And there is the high. So whatever happens now doesn't really matter. I can close the trade because we traded to that level. That's a level that we were looking for. This is another level in confluence that we can trade through these levels, hopefully with one candle, spike through, make it hopefully a large candle. We're making triple tops now, but the point is the objective was reached. Just highlight that line. We zoom in. You see this up close candle over there. Then that is what we are looking for. So this trade is not about making money or how much money it is or what is the risk. It was about entries, trading the breaker, looking for the target and the time that it has to trade to the target. Let's see what happens over here. That this inverted gap that we said we want to see it support price. There you go. That is a tiny glimpse of the machine.